Welcome to your ultimate dealing room wrap-up. The closing bell has officially rung on August 6, 2026. And look, if you're trying to cut through all the relentless market noise and figure out exactly what drove the tape today, you are in the perfect place. We're skipping the fluff and going straight to the data to give you the absolute most focused explanation of today's market action.
We had a dizzying barrage of numbers hit the terminals today, so here's our roadmap to navigate the chaos. We're going to kick things off with the daily market pulse, zoom out to the macro catalysts, drill down into sector movers and shakers, grade the Q1 earnings scorecard, and finally, perfectly position you with tomorrow's trading setup. Let's get right into it.
Section 1. The Daily Market Pulse.
If I had to sum up today's overarching sentiment, it was a seriously choppy, weekly expiry session. It essentially chugged the markets marginally higher. Honestly, kind of like a slow, heavy train just trying to make it up a steep hill. Looking at our first major benchmark, the Nifty managed to carve out a fractional gain of 0.05%, closing exactly on the dot at 24,636. The heavy lifting here? That was primarily done by Reliance and a really solid showing from the PSU and private banking sectors. They basically helped keep our heads above water despite all the intraday chop.
Meanwhile, the Sensex painted a slightly more optimistic picture, closing up nearly 0.5% at a rounded 78,955. Now, what's genuinely fascinating here is the sharp divergence we saw between the Sensex and the Nifty today. That spread was aggressively driven by the new closing auction session colliding head-on with the weekly derivatives expiry. It just goes to show how underlying structural market mechanics can heavily skew the final print. And rounding out our rapid-fire check on the indices, the Bank Nifty printed a firmer close, finishing up 0.55% right at 58,060. The financials definitely had a bit more of a tailwind today compared to the broader market, which wraps up our core pulse check.
Moving right along to Section 2, Macro and Geopolitical Catalysts.
We obviously don't trade in a vacuum, and today's macro catalysts pushing the tape were pretty massive. The absolute crucial point is the global risk-on tone currently being set by the US, Iran, and Oman. Word is they're close to a 60-day interim deal to reopen the Strait of Hormuz toll-free. Because of this massive easing in geopolitical tension, we're seeing Brent crude hover comfortably right near the $80 a barrel mark following a sharp multi-week slide. Make no mistake, this is a huge positive for India's import bill, our inflation trajectory, and the input costs for oil marketing, paint, and aviation companies. Shifting domestically, the RBI is playing ball too. They're holding steady at 5.25% with an accommodative neutral stance. Oh, and you can't ignore the government's aggressive monetization of PSU stakes. With the recent LIC offer for sale, they've raked in about 270 billion rupees across 9 PSUs just this year. That creates a very clear standing supply signal for those specific names.
All right, Section 3, let's talk sector movers and shakers.
This is where the day's specific stock-level drama really unfolds, and spoiler alert, the defense sector absolutely blew the doors off the dealing room today. We tracked a massive 4.5 to 6% surge practically across the entire pack. MAZDOCK rocketed up 6.3% to lead the charge. HAL was right on its heels at 5.9%, and Bara Dynamics closed up 4.8%. Cochin Shipyard caught the massive bid too, rising 4.6%. But you know what the crazy part is? There wasn't a single magical corporate filing that caused this. Nope. These shipbuilding and aerospace names were simply riding an incredible unstoppable wave of sector-wide order book and production optimism.
Looking beyond defense at our other key movers, KALYANKJIL staged a fantastic 5.0% relief bounce. That was basically short covering after a recent drop, though you definitely still need to watch gold price volatility there. On the flip side of the coin, it was a totally brutal day for BLUESTAR. The stock plunged 5.7% as the consumer durable pack cooled off hard on post-Q1 margin concerns. We also saw some entirely healthy profit booking hitting POWERGRID, down 3.9% on capex worries, and BSC shedding 2.8% after its massive recent results-driven run.
But of course, we have to ask the million-dollar question. Is the rumor mill driving the tape right now? Welcome to the Scuttlebutt segment. Dealing room chatter was absolutely wild today, specifically around MAZDOCK. There's a ton of unverified buzz on Telegram trading groups screaming about fresh export and warship order wins. The actual probability? I'd say low to medium, since literally nothing is actually filed, meaning this move is heavily momentum-led. We also heard whispers of consolidation and stake rejig speculation around LIC housing finance. The probability on that one is pretty low. It's a recurring rumor. But hey, if you are short on LIC housing right now, you need to keep your stops incredibly tight, because an unverified spike could easily wipe you out.
Section 4. The Q1 Earnings Scorecard.
It is the thick of earnings season, which means there is a dizzying barrage of results hitting the wire every single hour. The main heavy-hitting prints you absolutely need to be digesting tonight are Biocon, LIC, Trent, and Hero MotoCorp. These are the major structural stories that are going to heavily influence their respective sectors at tomorrow's open. For context, keeping an eye on recent key prints like Motherson, Apollo Tires, and Berger Paints will also keep you perfectly oriented amid all the reporting chaos.
All right, Section 5, tomorrow's trading setup.
First things first, let's follow the money. We are seeing extremely strong domestic institutional investor, or DII, buying, which is providing a massive floor of support for large caps. On the other side of the aisle, foreign institutional investors, the FIIs, are running completely flat. So the crucial takeaway here is that as long as the DIIs are buying, this market has legs. But an abrupt FII reversal to the downside, that remains the absolute main near-term risk to this tape.
Now for the tactical, actionable setup. The options data shows Nifty Max Pain sitting right around 24,600, while Bank Nifty Max Pain is pegged exactly at 58,000. Remember your weekly F&O expiry rules, folks. The near-weekly Nifty options expiry is now a Tuesday rule, so do not get caught assuming it's Thursday. Tomorrow is also a massive earnings eve. We have SBI and Titan reporting, so look to position for a post-result gap, especially on SBI. And our actionable idea and focus for tomorrow, we're looking at going long on HAL. It's the undisputed aerospace leader. It wrote a 5.9% surge today, and it has incredible order book momentum at its back. Just, be cautious of chasing an overextended move if the whole pack suddenly decides to fade.
Finally, Section 6, the final word.
Just a super quick bit of housekeeping. Everything covered in this explainer is my personal research for educational purposes only. It is not investment advice, so please, as always, do your own homework before putting your hard-earned capital at risk.
And here is the golden rule for our viewers. You absolutely do not need to subject yourself to loud, noisy news channels with flashing red graphics or endlessly scroll through confusing financial websites to figure out the market. This structured explainer is literally the only thing you need at the end of the day to stay fully informed and completely prepared for tomorrow.
To make sure you never miss out, hit the subscribe button and click the notification bell right now. Seriously, think of it as placing a limit order on market knowledge before the actual opening bell even rings tomorrow morning. But I'll leave you with this question to ponder tonight. With DIIs aggressively holding up the floor and FIIs sitting entirely flat, are we looking at a legitimate structural bull run right now, or just a low-volume expiry illusion waiting for a single catalyst to shatter it? Thanks for learning with me today, and I'll see you right back here tomorrow for the next market wrap-up.